So we're here with Jake Boaz with Crypto Yield Capital here in East Denver. Jake, welcome to the show.
Yeah, thank you guys so much for having me.
Absolutely, absolutely.
First live performance. So
First in person.
Yeah. First of all,
Very exciting.
I know,
Yeah,
I feel honored, guys. Appreciate it.
absolutely. This is great.
appreciate you being your guinea pig here.
Yeah. Well, great. Let's kind of get into it. Jake, maybe give a background of yourself and kind of where you started, and we'll kind of get into some thoughts and insights of what you're doing today.
Yeah, absolutely. So I grew up in the Dallas area and went to Texas A&M, did undergrad accounting, mastered in finance. Started my career at Barclays Investment Bank in Houston, doing oil and gas, and then transitioned to the private equity world for a couple of years. And while at my time there, I'd always had a huge passion for crypto, since 2016 or so.
Yeah.
And I found a really unique opportunity, to go out and start my own thing. And I said, back then it was when you could just, take a stable coin, make 20 to 25% just on that. And I was like, wow, we're trying to do that. Private equity, taking a lot of risk, building infrastructure out for a similar return. And so we started our first fund, Crypto Yield Capital, which is a hedge fund that focuses on generating yield on top of portfolio. So you can think about it like an index of crypto assets, trying to get exposure to, Bitcoin, Ethereum, alternative L1s, gaming, AI, you name it. So we try to give our investors, a full picture of the crypto ecosystem. We've been running that fund for just over 3 years now. And we recently launched a second fund, private equity fund, that focuses on acquiring businesses in crypto that generate cash flow. And then we distribute out that cash flow to investors monthly.
Very cool.
Thank you.
What's your crypto story? How'd you get into crypto initially?
Yeah, it's a funny story. I met a guy at Austin City Limits, the music festival, and he told me he was, a photographer, but he had like, designer stuff on, nice watch, all this stuff. I'm like, man, you must be a really good photographer. And after, a few beers, he opened up and he was like, man, I'm actually in this crypto thing. And I'm like, I got to learn more about this. And so he kind of started me on that journey. And I started out, trial by fire, like most people in crypto, doing the initial coin offerings, ICOs, and lost a ton of money, doing all that stuff. But man, I was hooked ever since. Just always trying to find new and exciting projects. Was doing it personally, my personal account for years, and then in 2020, with the birth of decentralized finance, that's when I really decided I want to make this my full-time gig. Just like from a traditional finance background, seeing the opportunities out there in decentralized finance, really brought me to where we are today.
Yeah, that's awesome. That's really cool. What was the kind of defining moment you're like, okay, I've kind of figured out my path, my strategy. Now I'm going to start to maybe take like outside capital from investors, right?
Yeah, that was the nexus of that. I was at my desk and I was like, you know what, I have enough capital from doing this stuff myself to really kind of branch out and do my own thing. I was lucky enough, to have a safety net too, with I always knew like if I screwed up entirely, went bankrupt, that I could go, stay at my parents' place or something in Dallas, so it's really nice to have that safety net. So I just, kind of took that leap of faith and, we started with, really small amount of capital. They call it friends, family, and fools, right? That want to invest in a 27-year-old fund manager that had never done a hedge fund before. But man, it's funny because there are a lot of guys I think that understand crypto really, really well, and they would make fantastic fund managers and make people a lot of money. But they have no interest in actually taking outside capital and wanting to invest on behalf of others. And on the flip side, you have a lot of guys in traditional finance that don't understand crypto as well, that do have the capacity to go raise a bunch of money, and they have really impressive backgrounds that don't necessarily do as well. And so I was hoping I could be that kind of bridge of, hey, we have that traditional finance polish, coming from traditional finance, investment banking, and private equity, paired with, hey, I've got now I almost have like nearly a decade of crypto experience. So we're hoping that, and so far, it's worked out okay.
Yeah.
Yeah.
So let's dive into your fund. So you have your first fund. Tell us again about, give us the high level, and let's get into some of the assets and things you're looking at.
Absolutely. So to start out, like I said, we're an index. So you can think of we have Bitcoin, Ethereum, um, a lot of different, some of the top coins in their respective industries. And we have three main strategies that we use to generate yield on top of the portfolio. So one is lending. So we'll have, stable coins in the portfolio, lending them out to guys that want to, trade Bitcoin or Ethereum with leverage or whatever they want to do. Historically, you can make, 10 to 20% yield on stables. And then we do primarily for, say, Ethereum, Bitcoin, we do a lot of market making. And so a lot of people don't know this, but uh, anyone in crypto can be a market maker. You don't actually have to be, if you're in the Nasdaq or something, that's a really, super tight game. You got high frequency traders,
The
and
Citadels.
it's like Citadel. It's
Right.
a very hard thing to do. But these geniuses, back in 2020, created these systems where anyone can provide liquidity for people wanting to trade, say, Ethereum and Bitcoin back and forth. And so every time someone trades, say, Bitcoin for Ethereum, they typically charge 0.3% fee on that transaction, and the market maker makes that. And so over time, what that does is, on our Bitcoin and Ethereum, we're making a yield on top of it in the portfolio. So that's the second strategy, and the third is like staking. Um, so most people watching this are probably familiar, but staking rewards for, say, Ethereum, providing security to the network and all of that. But we also do, what they call liquid staking derivatives. And so we'll take an Ethereum that's staked in the network, they wrap it into a token so that that token has an underlying yield on it. I think right now it's like 6% or so. And then we market make with the staked Ethereum instead of just native. And so we do use a combination of the strategies too to help generate yield as well.
I'm curious too. Obviously, there's a lot going on in the ecosystem. How do you keep up with it all? How do you do your main research at a high level, whatever you're wanting to share?
Yeah, no, absolutely. So I think that's a super important thing in crypto. I think you have to have a huge passion for it. So I was doing this stuff like personally, I would stay up, super late, midnight, 2 a.m. if the market's moving, especially to find, where can I get the best yield? So that's like my bread and butter. That's what I love doing on a day-to-day basis. And so I'm always, on Twitter, um, looking at, we used to use a tool called Nansen to look at where fund flows were going. Now we use a lot of, there's a platform called DeFi Llama where you can see, exactly, hey, over the last 30 days, here's where all the fund flows are going. Here are the new exciting protocols that are being built on these platforms. And so we typically, just try to go through and see, hey, where's the money flowing and where can we get the best yield possible on our investments.
Now, when it comes to like the strategy, because you mentioned, a couple different things like staking Ethereum, uh, liquidity pools for the dexes. With how do you kind of allocate towards multiple different yield investments, if you will?
Yeah.
Is it kind of like let's just go for the one that's the highest, or is it more let's kind of diversify it for maybe like risk, or kind of how do you think about that?
Exactly. So we never, put 100% of our portfolio in any, one protocol, right? I think that's, super dangerous. So we diversify across different blockchains, different companies and protocols within those blockchains. And typically, we're not like a mercenary capital. We don't just go try to make a yield really, really quick, flip it, and get out of it. We try to establish kind of a long-term partnership with these companies. So, for instance, we just announced a partnership with Aerodrome Finance on Coinbase's Blake Base blockchain a few weeks ago, and so we're partnered with them to say, like, when we generate yield on Aerodrome, if we lock our tokens with their platform, we get a bonus when we lock them up. And so,
Yeah.
I think it's important to, as ambassadors of these communities like that, we're not just leeching off what these guys are doing because they're building really, really cool technologies and platforms that we believe one day will be bigger than the Nasdaq, will be bigger than some of these traditional exchanges.
What's exciting to you as we obviously it's 2025, a lot of things have changed. Regulation in the US is changing. What's exciting to you as far as trends going forward?
Yeah, everyone says this. AI
Yeah.
is super interesting. Particularly, we're looking at decentralized finance AI, and so I'm sure people have heard of like these AI agents. They specialized AI to find yield. And so we're currently definitely looking at a lot of platforms that, I'm doing this myself, like trying to go and find the best yields and doing it, manually. But we think one day someone's gonna be able to type in like a chat GPT terminal, hey, I have Ethereum, where can I go get the best yield possible? And show me like a diversified portfolio I could do. And so there's some teams building, those technologies. And I think, ultimately one day, someone on their iPhone app is gonna have Ethereum in their portfolio and be able to, generate their yields, through a few clicks, which will be really, really cool.
Yeah,
That's really cool.
cool to think about.
Yeah.
Any other sectors or things that jump out at you right now?
I think centralized finance in general is kind of making a comeback slowly. I think now that meme coins have I hope they come back. I don't want to hit on anybody in the community. I hope those guys still make money and everything. But now that a lot of that stuff seems to be dwindling down a little bit with the meme coins, that there has been a flight to more traditional, my opinion, kind of better technologies and products, and so. We're seeing fund flows kind of away from meme coin kind of gambling stuff into some of these like centralized finance platforms like lending and automated market makers and things that so we hope that continues and grows.
Any other things that we haven't talked about yet that kind of jump out at you from the ecosystem, what people are doing, what's maybe, you know, concerning from a risk perspective or anything at all?
The buyback hack was definitely concerning. Um, yeah, that's something we take very, very seriously. Obviously, we use a company called Fireblocks for our security. You know, there really isn't a perfect solution out there. Unfortunately, there's always going to be that risk of, but we simulate our transactions before we do them. I think that's super important.
Talk more about that.
Yeah, absolutely. So when you make a transaction, say on the Ethereum blockchain or something, you really have to pay super close attention to, hey, what I'm trying to do is actually going to happen upon execution. And so what we do is before we make the transaction, we simulate it and we can actually see our balance changes and stuff before they actually happen. And so we make sure, hey, like the contract address is, correct. And, we have our whole, you know, protocol in place. We trade very infrequently, but when we do, we try to make sure that what we're trading actually is what we're trying to do.
Is happening real time in the space as far as other trends that other players you're seeing that are getting into, or what you're focusing on DeFi.
Mhm.
Maybe jump into that a little bit. What's happened in the past and where yields have gone now. You said they're back, right? From a yield perspective.
Yeah, so they were super hot 2020. I mean, that was when it was simple, right?
Right.
So you had you're in finance. You could deposit USDC, a stable coin backed by Coinbase, and make it was just paying 20%. It was just silly, it was super easy. That largely went away with because what's funny is they somewhat track treasury yields. And so once people got wind of, hey, I can make this much, on stables, that yield, fell pretty heavily through 2021, 2022, especially during 2022 as demand for leverage trading, largely declined, and treasuries and everything were, yielding pretty low. Now that yields in general and TradFi have come up, and crypto is much hotter, we're seeing that yields are coming back, pretty strong. And so we're seeing on stables right now anywhere from 10 to 15%, depending on where you're at. We obviously try to do more than that, but it's more challenging, right? You get more sophisticated on your strategies and everything.
What have been some of your greatest challenges operating a fund over the years?
Oh, yeah, that's a good question. Man, there's a lot, right? So one is the things that keep me up at night, right, are some of these hacks that we've seen in the space. And so I think the only true way to mitigate that risk is through diversification. So yeah, you just can't have too much money on one single platform or anything. You got to make sure these contracts are audited and just do the diligence you can. So that's probably our number one challenge as far as looking at that kind of stuff. And then also, a lot of our competition in 2022, left the space due to, they're using leverage. So as a, founding principle, we don't use any leverage in our trading strategies. We think it's, dangerous,
Yeah.
Yeah.
especially when, crypto is such a volatile market, right? I'm like, you really want more volatility in your portfolio than you have now. And so like there's certainly, ways people use leverage and make a lot of money, and it's fantastic. It's just something we're not, interested in most of the time.
Yeah. Kind of going off what Mike was just saying from a fund perspective, anything you would, obviously hindsight's always 2020, but anything you would have done differently, or for anybody who's new looking to potentially launch a fund in the space, any potential perspective or advice you would give them?
Absolutely, man. There's so much I would have done different, but I think first of all, if you're going to run a strategy, make sure you're doing it personally for a long time, especially with the market making and stuff. There's a lot of like I'm explaining it to you like it's in a simple terms, but some of the stuff can get very, very complex. And so definitely run it yourself, test it out, for at least 6 to 12 months. Just make sure what you're doing. But yeah, I mean, there's a lot of things that I wish we didn't invest in, right? That we did.
Yeah.
Really trying not to follow the hype train too much into stuff, and not. We want to be long-term partners, but not marrying, an investment, right? If it's not going well, sometimes you just gotta take your medicine and get out of it and move on. But that's why, again, yeah, diversification stuff is so important. You never just go all in one thing and hope it works.
For sure.
Yeah.
How's so where you're at right now is you're raising capital for second fund?
Yes. Yeah. So we're it's a closed-ended fund where our raise period, is probably through May or so. We have some optional extensions as well, depending on the market. Let's see what we do. But so the second fund is a completely different strategy. We're just acquiring equity in companies that generate cash flow. And so a lot of the time what happens is some of these early investors, have very large positions that they want to liquidate. And they can't do so at, with given the current market liquidity. And so we'll come in and acquire their stakes at, a 30 to 40% discount in some cases. And so if that company is generating, say, 25 to 40% yield by itself, if we can acquire it, at a much, a pretty hefty discount, that can increase our yield quite a bit. And so our goal is, to have a large portfolio of these companies, diversified and everything across blockchains and what they do, and then ultimately we're distributing out this cash flow to investors monthly.
Tell us about the companies that you guys are investing in. I mean,
Yeah.
it doesn't need to be specific names, but just kind of what type of companies even are these that are generating this type of cash flows?
Yeah, so our flagship one, happy to talk about. We announced a partnership with them is Aerodrome Finance. They're a company backed by Coinbase Ventures. Our thesis with that is we're hoping that more trading moves away from centralized exchanges like Coinbase and Binance and moves directly on chain. Our thesis is primarily that a company like Binance will not be able to compete with an autonomous organization, running directly on the blockchain.
Yes.
So you got to think, these companies have thousands of employees, they have office space, they have all these expenses. So when Coinbase makes $100 in revenue, they're earning, say, $20. I'm not sure exactly what their cash flow margins are,
Sure.
but they have a ton of expenses. Whereas if you have an autonomous organization just running on a public blockchain like Coinbase is based, every dollar in revenue that they generate more or less goes to token holders. And so you have companies that have 100% or close to it, cash flow margins, which is, I come from a world where that's insane, right? There's no CapEx, there's no anything like that. And so we're super, excited about these companies. Of course, it's crypto. Anything can happen. It's going to be volatile. It's going to, it's going to be highly variable. But we're super excited about what those guys are doing.
Yeah, cool. Exchanges make a lot of sense. Any other type of companies that are maybe a little bit more obscure that you're looking at?
Yeah, without getting into too much detail, we are looking at some of the more complex strategies. So like Pendle, for example, some of the the yield swapping that they're doing is super interesting. kind of evaluating that kind of stuff. But right now it's mostly, these exchanges, just because, we kind of see a clear path to, over time, the total addressable market is X, they're at 15% of that market today. We think that's going to grow. We think crypto trading overall is going to grow, quite a bit over the next 10 years or so. But yeah, there's definitely some more sophisticated kind of, they're trying to bring, like credit default swaps and some of these other things into crypto. We do think it's somewhat early for that, right? Like people, especially traditional finance is trying to grasp, hey, we just launched a Bitcoin ETF, right? It's going to take a while for them to go, okay, well, now we want to do a complex DeFi, strategy. Not saying that they can't do it. These guys are really, really smart. They have a lot of capital to push people around and stuff. But yeah, ultimately, we think the market's pretty early.
Yeah, that's really interesting. Yeah. And how's the talking to different players in the space? Obviously, you have two different strategies and different funds, very different. Obviously, more on the illiquid closed-end side, it's more of a long-term play, right?
Mm-hmm.
How has those conversations have been in the marketplace? There's a lot of stuff happening right now in real time. I guess maybe where you see the market going relative to what some of these opportunities you're looking at are going.
Yeah, I think there certainly is a demand for yield, especially like people love doing real estate. They love doing so like a oil and gas world. They love their MLPs. Getting monthly cash flow and everything. So that conversation's been easier for us. For people like, hey, this strategy is completely different. The first fund is we're trying to make a return based on more or less the price of these assets going up. Of course, we make an underlying yield, but ultimately, we're long. Bitcoin goes up, we benefit. The second fund is different, where I like to say we're not digging for gold, we're selling shovels. Now, if the price of gold collapses, people need less shovels. But overall, we're hoping that, over time that, these companies continue to, do well and generate, cash flow and grow their businesses and everything.
For sure.
I guess when people bring up, obviously the element of risk is always there, right? Risk mitigation, risk management. Investors probably ask that as well. What is kind of the thought process on risk? You talked about it early on. No leverage in what you do. Any other risk mitigation things that you focus on from a strategy perspective, or even just as a business, how you operate?
Yeah. So one is the use of stable coins in our portfolio. So we have, stables in the portfolio that sort of reduces the volatility, a little bit. That can help. But really, I think, the biggest risk can be, lack of diversification. So we look at that. We've looked at insurance for some of the stuff, but it digs into the return so much that it doesn't seem, something feasible today. We think ultimately we'll have a ton of, blue chip insurance companies that will offer much better rates and everything. Be helpful. We've looked at hedging as well. Hedging's, really expensive too, with funding rates and everything. And it's a lot. Everyone's like, yeah, well, Jake, why don't you just do your market making and just short Bitcoin? I'm like, well, it's much more complicated than that. You can get blown up, pretty fast, doing that. It's a tough game.
How's raising capital right now for a fund?
So it was super hot through Q4, when Bitcoin was on 100,000 and I was getting calls, Jake, I heard Ripple's going to 10,000. Should I buy any? I need to buy XRP. So that was nice. It's cooled off a little bit this quarter, but we're still seeing a lot more interest than normal, which has been really
Is
nice.
it like, are investors excited to jump in right now? Because I mean, I felt like this year's moved so fast. Like, just thinking, out loud, like, Solana's down over 50% in like what's been a month. Our investors, is this something investors like, all right, we got to get in right now while it's low? Do you get any calls like that, or
some existing investors I do, which is really nice. They'll want to, hey, things are down, I want to add here. But unfortunately, it's usually the opposite. When I'm calling people in 2022, hey, like, Bitcoin's at 20K, this is the time. They're not as interested, and then when things are up, it's just much easier to raise capital, unfortunately.
Yeah.
But
Do you feel like investors are more educated now from your point of view? Or is it still more, I'm sure it's still very much an education process. Explain to them where things are at and how things are going.
definitely, I think investors are much more familiar with what Bitcoin is as a start, because that was a pretty big challenge for our first fund, especially back in 2021, where to understand what we're doing, first you need to understand like what is Bitcoin, like how do we start there, and then okay, what's Ethereum, and then okay, what's a smart contract, and then okay, Jake, what are you doing with all this stuff? It gets really, really complex. And so boiling down these, really complex topics into digestible things that, like investors at the end of the day, they're paying for expertise, to do this stuff for them. And so they don't need to know everything, but it's it's still, a pretty lengthy education process typically. But yeah, they eventually, they understand.
Cool. Well, Jake, this has been a lot of fun. This is our first in-person interview, so we're excited about this. Hope to do, continue to do more of this, as we go to these conferences. So, really appreciate you joining us for this. Where can people go to connect with you and learn more about your fund?
Yeah, absolutely. So I'm on LinkedIn, Jake Boaz. You can find me on there. And yeah, if anyone has any questions about crypto or wants to get in touch with me, yeah, please do.
Awesome. This has been amazing, as Mike said, and we enjoyed the conversation, and I'll make sure to put all that in the show notes as well.